Hi, this is Mark with your analysis for the week commencing the 13th of March. This is the dollar yen on a weekly chart, and I have marked with an arrow here. This was January 1995 when the last major earthquake, and not as big as the current one, hit Japan. Now, it may seem insensitive to be talking in terms of money when people have died and the crisis is still ongoing, and it is, but the truth of the matter is the Japanese people will be attempting to recover from the situation and the markets will go on. Now, personally, my best advice for you is, from a Forex trading perspective, is leave it alone for a few days at least, because the Bank of Japan has already said it's going to prop up the currency. There will be all kinds of things going on. There is the ongoing possibility of further quakes. There's also this ongoing problem with the nuclear power station. And at the end of the day, we are technical traders. This is the January 1995 candle, and this is the weekly candle. This was the week that the earthquake hit last time. Price then, for the next couple of weeks, went nowhere. And this will have been a similar scenario whilst everybody was waiting literally for the dust to settle and find out what was going to go. And then what happened? Come at the end of January, the yen actually appreciated 2,000 pips, which is down here, and eventually by the year end, back to October, November, we were actually back in a similar area where the year began. Therefore, what is going to happen the rest of this week and in the coming months, we can perhaps look for clues there, but as I say, in the immediate short term, I would leave any yen pair alone. We have no idea what the impact is going to be, and therefore it is technically untradeable. And even more bizarrely for me was on Friday. This was after the initial earthquake and the assessment still going on. The yen actually appreciated in value. Now, there are theories that this is to do with Japanese investors bringing money back home, but the logic seems to me this is going to cost trillions to put right. But watch this space. I mean, spookily, what it did do on Friday is it spiked up and touched, I think, to the pip, the 83.30 area that we've been watching for weeks and weeks. But I didn't touch this with a barge pole and recommend you do not either. This is the pound dollar on a weekly chart. And in recent weeks, I have shown you how we are trapped in a sideways range. And here we go again. We're now at week 6 and we're stuck in here. The difficulty has been is that whereas normally what price will do is respect an area, so it would have come down to 160 and moved straight off. They have been, on lots of pairs, price has been going through and then bouncing back up. And I think this went 60 odd pips further below. What the way to play it for the week ahead is simply look for these areas once again. The areas for me on the pound are, I will be interested to short at 163. And up here we've got up twice, we've got up to 163.35. So 163.30 would be counter trend and therefore half stake, but I will be interested to short from there. I will be interested to long from 160, and if that breaks, I will then be looking at 158. 158, as you recall, was from previous weeks. This was the first time we've had this EMA cross in 2 years, and last time it happened we had a move of 6,000 pips. So if it comes down to here, I will be very, very interested for a longer term move. However, as I say, the areas to consider here, here and here. This is the euro pound. Now the euro pound, we were in a downtrend. It came up to 78.6. It's now broken through it on this recent move. What do we do next? Well, you may be considering a long. But watch this on the weekly chart. Very, very interesting scenario. And I pointed this out to you last week, and it's now moved further down. These Bollinger Bands are indicative of price liquidity drying up. And this is what I call a never in a million years Bollinger Band, meaning that if this Bollinger stays closed on the weekly chart, then there is a very good chance that this price will come up, touch this area, and move back down. It is very rare for price to break through when the Bollinger is like this. If, on the other hand, the Bollinger bends open, then that would give me more confidence to long. If I was looking to long, I would be looking to long around 85.50, which is this weekly 55 EMA down here, and I will be interested to short at 8700, and this is the weekly chart. Now, if we place a fib on the weekly chart, I have a feeling, here we go, this area now, I always look for multiple reasons. Well, multiple reasons for a short on this euro pound would be the Bollinger Band, the 8700 round number, 61.8% fib, and its previous support and resistance. So multiple reasons why I'll be very interested to short the euro pound if it gets down there, and I will be interested to long around here. This is the euro USD on a weekly. And another one where we've come up on fibs, we've come to 78.6. This is the crucial area. This is 140. And what we have here, we have the 78.6 fib. We have a weekly trend line that goes back a long way. And it's a 140 hold number. And once we get above 140, Euroland and Mr. Trichet do not like it. This is hugely significant. And the way to play this is, if you are thinking in terms of a short, then 140 again, and you would need to place your stop above last week's high and above this trend line. So you would be thinking in terms of a stop up here, but you're looking for potential 500 pip move down, risking 50 or 60 pips up here. If you are thinking in terms of a long, then for me, I need price to break and close above this trend line before I would even consider it. But that's the area, crucial area for me. Similarly, where's it going to stop? Well, the logical area will be back down here at 135.00. So if during the week you don't short it and you're waiting only to long, then this area down here, 135, 135.30, will be very important because these EMAs will move up slightly as well. So watch where they close, but somewhere around 35.50 for a potential long. This is the dollar Swissy. Dollar Swissy, we were looking previously, you notice here, in recent weeks we have been looking at price bouncing between these two areas. Last week it started to break out, and what do we look for here? Well, we start thinking in terms of, we will be interested to short again around 93.65. We are in a long-term downtrend here, and therefore that's the crucial area. If it breaks there, then you have to start considering potential longs. Personally, I'm only interested in a short. Bear in mind that the Swissy and the euro usually are correlated. If this one starts to go down, the euro should go up, and if this one starts to go up, the euro should go down. This is the Aussie dollar. The Aussie dollar has been extremely messy in recent weeks. We were bouncing between this area of support and resistance, but we've had some nasty spikes, and we had it again on Friday. Yes, it bounced off 1.0020 area that we were looking at, 1.00, but it did spike through nastily again. It has stopped at the trend line, but the areas for me once more are here, 1.0192 possible counter trend shorts. It worked on numerous occasions in the past. I wouldn't want to long here because this recent high double top scenario is not far away. So I will be interested to counter trend short here, and I will definitely be interested to long once again around 1.0020 or possibly 30 now with this EMA. This is the CAD. Last week I was looking for a pullback to 9800, 9816 area. I didn't trade Friday, and unfortunately it did it then. I know quite a lot of you caught this. Well done. And that has been a very nice move down for at least 70 pips so far. Once again, very similar to the Swissy. This is in a long-term downtrend. I am only interested to short. This is the logical first area for me. Watch the Bollinger Band once again at market open. This is a daily. If that was to slam shut, that would give some support to the idea of price going up. If it stays open, and this is open on the weekly and the monthly as well, it gives the clue that this could well break further down. And I showed you in recent weeks, this is the weekly, and I showed you last week we were outside the Bollinger, and I said price was likely to return within, and it did. And what did we have last week? We have, this is known as a spinning top candle, where price has opened and closed almost in the same area, and this is signifies complete indecision. And the final thing, as far as Bollingers go, I showed you this. Last month, this Bollinger Band held this candle up, and I said to you, if this monthly Bollinger swings open, it gives permission for price to fall. Lo and behold, so it did. Now, in 2007, we got down to 9400, 9430. Price did actually spike down all the way to 9050. So there is a history here of potential move down. Everything suggests that it will continue to do so, and therefore that is my only way I'm interested in trading this pair. I say everything else that I normally trade, euro yen, dollar yen and Aussie dollar yen, I am going to leave, and I strongly recommend you do the same. Let's check out the charts again tomorrow, and I suspect we will be looking at 4-hour and daily charts again for the week ahead. Have a great week.